What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us and what you should be watching for going forward. I'm also going to talk about why earnings tomorrow is going to be very interesting because of all the Fed speakers coming out and the catalyst ahead. Before I break anything down about all this information, though, before I get into any more details, let me just mention a couple of things real quick. Firstly, I'm not a financial planner, so take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000. And the best part is, then it could be a free Tesla, Neo, or AMC share. The offer ends very soon. This is going to be the last day I actually promote this, so please check it out before they run out. With that out of the way, let's get on with the video. Also, guys, have a very happy Mother's Day. I hope you guys are doing very well and spending time with people you love. I appreciate all the mothers out there. I want the best for everyone, so please stay strong and just know that you are loved and appreciated. But anyways, let's talk about the stocks. Let's talk about what's going on with the market right now. SPY was down just a little bit for Friday, but it did try to get a rebound at the end of the day. Despite that, there is a potential bullish divergence that's developing on the 1 hour time frame, so it's very likely we're going to see an attempt for a short-term bounce. But I don't really think that this is going to be, the best move for the upside, at least in my opinion. There's a potential head and shoulders developing on SPY, and there are lots of very negative catalysts alongside a much bigger bearish divergence that's developing. All of this is telling me that for the short term, for tomorrow, we might see a small attempt to bounce, but for the more medium term, okay, there's much more downside coming, and we're likely going to see a big rug pull because of the debt ceiling and because of other factors like that. I'm going to break down exactly why that is. Now, with the whole debt ceiling, we have a June 1st default deadline, and this is likely going to incite lots of fear amongst lots of investors because of the fear that's going to be invoked by the media and because of some panic of more and more fears. Now, this is important because this impacts the entire finance sector of the United States. And what happens is when the fear perpetuates, Wall Street will take advantage of this and they will use this news to short the markets, right? That they may let the market pump again, but as the market pumps, I believe they're most likely going to start shorting at the top harder and harder and harder because we are getting ready for a big rug pull as we approach June, in my opinion. I'm going to break down exactly why on the charts in just a few minutes. We also have some earnings coming out. We have like Monday.com, the Home Depot, Target, Walmart, Ross, just a lot of retail, but nothing too massive compared to like Apple's earnings a few weeks ago. Now, for the Fed speakers, we have Bostic in the morning, 45 minutes before the market opens. So they might cause some downside very early during the pre-market. But then we have Kashkari right before the market opens, right? So Kashkari might help the market pump a bit. He does tend to be more on the dovish side. And when he speaks, the market tends to like it. Then we have Barkin, who could cause more downside for the markets later on. 3 hours after the market opens, Barkin will be speaking, which could cause some downside going forward. As far as SPY goes, we have a 411 max pain for tomorrow. We have a 1.68 put to call ratio. Maybe the market pumps a little bit, then it just sells off going forward before getting a close very close to max pain, if not a little bit lower. So we might get a flat day tomorrow. But overall, guys, I mean, in my opinion, there's still likely downside coming regardless of this. Now, talking about the charts, I'm going to be very brief. It is Mother's Day, so I don't want to make this video too long. There's a possible, the really bullish thing you could say is the divergence that formed right here on the smaller time frames. This just happened over the last couple of days. So this is a tiny divergence on SPY, which could lead to more upside and a push up as we approach Monday. But on the larger time frames, like if you look at the daily time frame, for example, there's a very clear bearish divergence that has developed and it's likely going to play out for the more medium term. Also, you can't forget about the fact that there's a head and shoulders like formation that's still valid unless SPY breaks 417 because of some catalyst. That's going to change my mind. But for now, as long as we're below 417, this is valid and this is likely going to lead to more downside, right? We have all these gaps. It's likely going to start filling these gaps over time. I would say very soon the market, it could remain choppy for some more time before we start to see more bigger downside back to the 390s over the next couple of weeks. But by the time we get to the June period, I am anticipating more downside. and I believe this will affect the whole market. On the MACD, there's this bearish crossover, a bearish divergence right here relative to the price that was getting higher, and it's continuing to tell us there's a sell-off coming, right? This is the more like bigger time frames. Why? Well, it happens to correlate with the whole debt ceiling. The next CPI comes out in just a couple of weeks too. That's important because CPI could be a little hot because of high inflationary expectations and because of the summertime. It's a possibility, not a guarantee, of course, but it's a real possibility and it's a real risk, especially because of oil production, which is likely going to slow down in Iran, and also because of OPEC plus. So, like I said, guys, let's be very patient. For tomorrow, we might get an early morning pump up, a nice bounce, and attempt to fill this gap at 415. We could try to do that, right? It's very possible, but I'm not anticipating it to be the bigger move. It's just a few dollars of a pump compared to so much more downside over the next couple of weeks. And for this week, right, I think the market might hold up for some time earlier during the week and might get a sell off to fill this gap down to 406. I'm expecting or anticipating that this gap might get filled this week, the 406 gap down there. And I think we're very likely going to end up revisiting these levels. I think the market is weakening, and I think we're going to need a catalyst in order for the bulls to get a victory. So for this to break out, we need a bullish catalyst. And so far, it's not showing. Okay, we do have Powell speaking on Friday. So if he does announce like a pause or something like that, then yes, that could change my opinion. But for now, I don't think that even Powell, speaking is enough for the market to bounce unless he says something massive. I'm not really seeing that. I think the most likely possibility is the market holding up for just a little bit longer, trying to push up a little bit before we start to see more downside. Tomorrow we might get a very flat close, a nice push up, then a drop. And then for the later days, later on during the week, we might see the market start to come down, fill this gap down here, trade a little bit more sideways before more downside as we get very close to the debt ceiling limits being met. I think the market's going to see more and more selling pressure because of it. And I do believe this head and shoulders is valid and it's most likely going to play out. And I believe that it's very likely downside is still coming. So I'm still holding my foot down. I'm still holding my stance as before. There's a very big bearish divergence on the QQQ and a rising wedge. So that's once again a formation that leads to very bearish outcomes. Let me see where my drawings are. My drawings are right here telling me that there's likely going to be downside for the QQQ. It could push up and hold up just a little bit longer before we start to see a break to the downside. That's likely going to come over the next couple of weeks. For Tesla, it's going to try to rebound because of the bullish divergence that's forming. It's very likely that on the 1 hour time frame, this divergence could play out where Tesla tries to rebound, and it's quite oversold, and it needs to just see some relief temporarily. So it could come down a little bit more and then try to get the bounce, or it might just try to bounce from here, a very small one. And if it doesn't break 177, it could be forming a head and shoulders, right? This could be a left shoulder, this could be a head. So overall, even if it does bounce, I do believe Tesla's going to remain choppy, then eventually start selling off more by the time we get to June. For Coinbase, I mean, all of what I'm saying will translate to different stocks. The market tends to be very correlated. For Coinbase, it's slowing down, losing momentum, but it's about to get a bullish cross on the MACD. There's also a bullish divergence that developed right over here. I think it's on the verge of developing it. This is important because I believe Coinbase is on the verge of attempting to make a bullish move. You can see compared to these levels, Coinbase was more oversold than back when it was at 47. So this is forming a divergence. It's going to try to bounce a bit before we start to see more downside. But overall, guys, downside is still imminent regardless of this. If the dollar keeps breaking out, okay, the dollar's showing signs of strength. If the dollar cools off a bit because it is overbought, if it cools off on the hourly before it just continues to break out, that is going to become very bearish for the stock market, and the bears are going to get a big victory. The market could bounce a little bit. Maybe the dollar cools off a bit first. But then if the dollar keeps going, guys, it's going to be a big red flag. Make sure you watch the Dixie or the dollar index, whatever you want to call it, because the more it breaks out, this is going to become more and more bearish for the stock market. The signals are already starting to form. NEO is likely going to make an attempt to bounce to get back above $8 to 8.25 before we start to see more downside. There's a bullish divergence forming. It's going to try to bounce, in my opinion, just a little bit looking at this wick. But overall, I see a bigger sell-off later on, just like the whole market. The HYG sold off as the smart money or the bonds traders are continuing to sell in the market. Smart money is continuing to sell. They're not liking the market. They're not buying. So please be careful. Microsoft could try to rebound and get back to about 310 or so, but I see it chopping around quite a bit before more downside anyways. There's a bullish divergence that's forming, so it's going to make an attempt to in my opinion, bounce, it's going to get back to the 310s before this thing continues to sell off. Not much upside is left. I think it's overextended. And soon we're going to see Microsoft start downtrading and getting back to 300 flat over the next few weeks. For the VIX, here's the red flag. The VIX was just barely green, and the VIX has a bullish divergence on, I believe, the weekly chart. It might be on the daily as well. Uh, I'm thinking that the VIX has a possible inverse head and shoulders formation on the daily chart, which is bullish. So maybe the VIX drops a little bit as the market pumps, and it ends up basing before it continues to break out. That's one possibility. You could also argue that on the weekly, there's the bullish divergence, very clean and clear bullish divergence right here. So it's very likely we're going to see this thing break out soon. It is due for a breakout. It's been a long time, too many weeks, if anything, and I believe it's going to come soon. So, anyways, the VIX is likely going to bounce. By the time we get to June, the market is likely going to come down. The SQQQ is also forming. I know it's just a little bit green right now, but it has been forming a bullish divergence. Why? Because when you look at the chart, it's making a new low, but the RSI is making a higher low. So I'm just saying the same thing on most of these charts, guys. A small rebound tomorrow, even for Amazon. It's likely going to try to rebound a bit, get back and retest the 200 EMA around this uh, it's going to get closer to about 114 to 115 one more time before it starts to sell off again. That's what I'm seeing for Amazon. For Nvda, it's going to make an attempt back to the mid 280s one more time, but it is weakening as time goes on. There's also a bearish divergence forming, so it's likely going to start selling off soon. But I think it could make an attempt to push up one more time with the market before more downside comes anyways. You can see right here, we're about to get a 1 hour crossover on the MECD. So it's going to try to bounce first before more selling. And I'm seeing the same thing on everything. Even Aapl is due for a small bounce. It is a little bit oversold from the last time I looked at it. I think looking at it without the extended hours, it was oversold. Aapl is going to try to make one more attempt up before it continues to sell off. We're about to get a bullish cross on the MECD. But overall, guys, the bigger move is not going to be the upside. Aapl is due for downside over the next couple of weeks. I'm still keeping my word. I'm not changing or flip-flopping. The only thing that could change me would be some bullish catalyst that comes out of nowhere, such as Jerome Powell saying something unexpected. As of right now, we're not seeing it, so I'm still leaning much more in favor of the bears for the next couple of weeks, approaching June. All right. So, anyways, that's basically the gist of everything. I'm just going to end it from here because it is Mother's Day. Please have a great Mother's Day. And don't forget, I have some merch for you guys if you're interested in buying anything. If you want to buy a shirt that says money is calling to the moon, buy the dip, a tank top, a hoodie. It's really up to you. And don't forget about the Moomoo link. The offer ends very soon. This is the last day I'm going to be promoting this offer. Thank you. Neo in the market to the moon, the whole market to the moon, not just Neo. SPY to the moon and Tesla. And peace out.